Today, folks, we're diving down into why Facebook continues to crash even after its earnings. We're going to go through what matters most from the earnings report, and I'm going to share with you whether I'm buying more or not, because currently Facebook's trading around $315 a share, down almost 18% from its all-time highs here, folks. I have about 47 shares in total, some of the best shares I've purchased recently. Well, not recently. I've been holding on to Facebook for a good couple years at this point, but I got an average buy here of $174. I'm up just over 50% on these shares as it stands. I'm currently down on the shares I repurchased in my corporate account, but we'll come back to this in a little bit here, folks. First of all, let's talk about the daily active users that Facebook has been able to achieve still, because this has been starting to lackluster at best, but we are still growing basically quarter over quarter, going from Q2 of 2021 at 1.9 billion users to 1.93 billion, and we are seeing growth across the entire board still, so hopefully that continues, because I think that's going to help continue to drive growth. Taking a look at the Facebook average revenue per user, which is really fascinating numbers, because this puts a price tag on your head and you get to find out exactly how much you're worth to Facebook. And basically worldwide, the average numbers have been roughly flatlining at about $10 per user, but in the US and Canada, where you likely are, you're worth about $52.34, apparently a quarter. So keep that in mind. This is for Q3. So basically to Facebook, each individual user is worth almost $200. Insane, right? Absolutely insane, with some of the lower numbers coming in from the rest of the world. But let's continue taking a look at some of these analytics with the revenue, because this is where people found a little bit of lackluster in performance, because they basically just met their EPS targets here, sitting about 29 billion for Q3, which is actually down slightly from the quarter prior. And people don't get excited when you're not growing quarter over quarter in this pandemic. And, you know, Facebook has lowered their guidance. A lot of this coming from obviously the big hit coming out of Apple, allowing people to opt out of targeted advertising. And we can see that has led still, in my opinion, to incredible earnings. But you have to remember, year over year, the earnings were up 30%, or the revenue was up 30%. But if we go into next year and these numbers continue to flatline, we aren't going to see the same kind of revenue growth that we saw this year compared to the quarters last year, right? So we can see this big growth momentum move is about to peter off. And if that continues to be that way coming into next year, obviously, you know, analysts, all the big bulls on Facebook aren't going to be seeing the same kind of numbers, which obviously leads to more bearish sentiment within the stock price. But just looking at a few more statistics, like revenue by Facebook's users geography, we can see they finally got hit in the US and Canada. First time we've seen a bit of a decline in a little bit of a while, from 13.7 billion to 13.6. Same thing with Europe, which you can see the little legend down here, guys. We saw an increase actually in Asia Pacific and an increase from the rest of the world, and that's probably because the rest of the world is continuing to adopt internet. Starlink's coming out. I mean, people are getting more access to iPhones and things of that nature. So we could expect to see continued growth coming out of the rest of the world, hopefully, which will hopefully continue to stabilize the earnings moving into the future. Now, expenses as a percentage of revenue. The expenses are where I really wanted to pay attention to, because they've been hiring a lot more staff, dealing a lot with a lot more political BS. You know, they're getting more into obviously litigation issues. And luckily across the board here, guys, the expenses haven't actually gone up or really gone anywhere like crazy. So it's nice to see that Facebook's keeping a nice hat on their expenses. And then finally, net income, guys. Let me scroll up a little bit just to make sure my head's out of the way so you guys can see these numbers. But just taking a look, guys, for Q3, their net income was 9.1 billion against Q2, which was 10.3 billion. But again, we can see a lackluster in growth here coming from Q4 of 2020, which is something that will probably continue to flatline at least into the end of this year and probably into early of next year. But taking a look at free cash flow, where things matter a lot, with them cooking the books, knowing exactly how to play with their high margins, we can see their free cash flow has actually increased to an all-time high of about 9.5 billion. So that is really good. Now, finally, just to add some notes here, folks, taking a look at the actual value of Facebook, comparing it to something that sits in the same index, whether we're talking Tesla, whether we're talking Microsoft, that traded at absolutely absurd valuations today. The forward PE right now on Facebook is sitting at about a 20.7, and the analyst price targets have not really changed that much, guys. We are still expected, you know, from the higher end, about $500 price targets, with an average still being around $400 to $417 a share here, showing a represented upside potential of maybe 30% returns. Now, I'm sitting on my hands here watching this, not exactly certain of what I want to do particularly. I am going to maybe pick up a few more shares because I was buying into earnings, and that hit me a little bit. Obviously, I was buying in the 320s, and now we're a little bit below that. And we saw after earnings the stock rally a bit, but then investors started figuring out that, hey, we're going to see lackluster growth here coming into the future. So from a stock pointed percentage, guys, I don't think we're going to see the same kind of growth we've seen, but at the same time, for the valuation you're currently paying on this company, you can't help but buy it, in my opinion. I think if you're looking for an S&P top 10 company that has crazy huge cash, crazy huge growth coming out of AR and the VR side of their business, which, by the way, has been growing aggressively, and that is where they're kind of looking to pivot into their future. We still got a lot of crypto and stuff that could potentially come up as some good catalyst in the near term. So for me, this is just kind of like one of your, your all-around Johnson & Johnsons of the tech world. It's just something that I think everybody should have a piece of, especially when we get these big downtrends, especially with all the political nonsense that always comes around with the court cases. And we can see this happens to Facebook all the time. They get these kind of lower expected guidances, the stock usually drops 15, 20, 30%, and then it always rallies back to all-time highs. So I would take this, in my opinion, as a buying opportunity. But at this point, folks, I just want to pass the question off to you. What are you doing with Facebook? Do you like it? Are you buying it? Do you think it's going to go down farther? I'd love to hear about it in that comment section below. But stay cool, stay awesome, and I'll catch you in the next one.